I can start now, I think. So, good morning, everybody at EVPA. Great to be here, especially after Impact Fest last week, where EVPA had a great session. Today, I'm here with three ladies. So it's good to have more ladies on screen than only men. Very often it's the other way around. Today I have with me Ilka Wikke from Boehringer Ingelheim. Very great to have you here, Ilka. Jessica Lee from Medicine Discovery at Catapult, in short MDC, and from Nova Biotics, Deborah O'Neill. We're very happy to tell you more about funding a cure today. And maybe, Jessica, I can give you the floor first.
Thank you, Edward. And I'm really excited to be here today to tell you a bit about MDC and WeShare's new partnership. So MDC was set up by the UK government around 5 years ago with a mission to reshape medicine's discovery. And we do that through a few innovative mechanisms, one of which is to drive a new model for patient-focused medicine discovery. So we engage closely with medical research charities, with patients and clinicians to identify where there are huge areas of patient unmet need. So areas where new treatments are really required. And around those patient needs and priorities, we build research strategies across different sectors, and we bring together leading experts from the clinic, from academia, and from industry to work together to catalyze new R&D efforts and ultimately to bring new treatments to patients faster. So we have 3 programs in different therapeutic areas. The first is in psychiatry, so diseases of mental health, where we've brought together leading pharmaceutical companies, including Boehringer Ingelheim, with charities and contract research organizations to drive new efforts in psychiatric research. We've also got a program in hearing, so looking at hearing loss and tinnitus, for which there are currently no medicines on the market. And that program is all about bringing a new emerging therapeutic area to the clinic. And then finally, we have another program in cystic fibrosis with a focus on identifying new treatments for infections. So people with cystic fibrosis have a buildup of thick, sticky mucus in their lungs and other organs. And this creates a perfect breeding ground for bacteria, viruses, and fungi. And unfortunately, this means that people with cystic fibrosis have infections from a very early age. They take antibiotics from a very early age, and eventually they'll become resistant to those treatments and they will die from antibiotic failures. So identifying new treatments for these infections is an urgent unmet need, for which we created the CF-AMR Syndicate, the Cystic Fibrosis Antimicrobial Resistance Syndicate. And I'm pleased to introduce Dr. Deb O'Neill, who's the chair of that program. So Deb, are you okay to introduce yourself and tell us a bit more about the syndicate?
Sure, thank you, Jess. And it's an absolute pleasure to be here today as well. So yes, I can obviously focus on the cystic fibrosis aspect of MDC. My day job, as Edward introduced me as, is the CEO, and I was the founder of Nova Biotics. So we are a biotech company designing and discovering novel antimicrobial therapies for a range of diseases, but including the infections that Jessica just mentioned, that cystic fibrosis patients suffer from. That's very much our focus, novel immune-based antimicrobials. And it's an absolute pleasure also to be the chair of the CF Antimicrobial Resistance, which we'll refer to as AMR Syndicate as well. The syndicate has really brought together innovators in the CF AMR space. So leading clinicians very much involved in research, academics, but also innovative companies from across the UK and the EU, with a focus on antimicrobials, but specifically programs looking at antimicrobial therapies for infection in CF. And our mission is really to accelerate the development of that innovation into therapies that are going to make a difference to CF patients at the end of the day. And by supporting innovators, and also actually bringing in another stakeholder, if you like, that we didn't mention, is the patient aspect as well, but really accelerating development of those therapies by providing support for those highly innovative drug developers. And Jess, I think back to you.
Thanks, Deb. So the medicines discovery landscape has changed quite dramatically over the last 10 to 15 years. So many large pharmaceutical companies have reduced the amount of R&D that they do in-house. And actually, there's been a lot of growth within the SME sector. So there are a lot of spin-out companies and startups that are really driving kind of risk-taking, innovative approaches for medicines discovery. But actually, these startups and these new companies find it really difficult to secure the catalytic funding they need to get enough data to then convince a venture capital firm to invest into their company. And this is even more difficult in areas where there's high patient need because drug discovery is deemed difficult, for example. So this means that companies really struggle in that early stage of their life cycle. And I wonder, Deb, can you tell us a bit more from your experience as CEO of a company, what this struggle looks like? And
absolutely. So as you mentioned, Jess, the innovation in antimicrobials research is absolutely coming from the SME space. It's an area also that is really being driven. New solutions are coming out of SMEs, and Novobartics is an example of that. I mentioned we're developing immune-based therapy, so this is a very new approach to tackling infection, and it's just not been an area that's been on the radar of funders as well. And this is all really down to the commercial model and what's been seen as the broken reimbursement case. So antimicrobials, as they are, being cheap, not a strange model where you're trying to de-link sales and use of antimicrobials with reward. And there are what we call pull incentives coming. The landscape is changing, but it's very slow. So new antimicrobials are obviously being restricted, and obviously the concept is to use innovation as a last resort to try and protect very precious antimicrobials that still remain the cornerstone of modern medicine. But resistance is obviously such an issue. We need to prolong the lifespan of these critical therapies as much as possible. So there are challenges very much for SMEs to get the funding that they need, both from the venture capital community and grant funding. Traditional grant funding is obviously very competitive as well. So to try and drive that innovation forward in the antimicrobial space is very challenging anyway. Add to that, in CF, you're also dealing with a rare disease still that has its own challenges in terms of the business case, if you like, relatively low patient numbers, pricing, reimbursement. This is why the syndicate and looking at innovative funding models is even more critical. So add to the challenges that you have across the AMR antimicrobials landscape, we have our own niche within that in terms of the CF therapy area is really critical. And Novobartics has found its way through it, but I think, and as I mentioned, the landscape is changing and it is looking a little bit more positive, I think, for SMEs, but that's happening very slowly, and we need change to happen much more quickly. So I think, for Novobartics and other companies in this space, it would have been great if the innovation in funding that we're talking about today, could have been there a little while ago. So it's, I'm so supportive of these models. And the one obviously that we're going to be exploring today really could be a game changer for the companies that we know through our experience, even in the CFAMR space, who are coming through with some fantastic innovation that could really make a difference to patients in hopefully the not too distant future. And a model that isn't just going to benefit those SMEs, but paying it forward to benefit SMEs coming even behind them. So this sustainability I really like.
Thank you so much, Deb. Over to you, Edward.
Okay, thank you. It's very good to hear that both of you are so in favor of new funding models. That is also what we're going to discuss today. I'm Edward de Jager from WeShare. I'm the founder of a not-for-profit organization, and what we did was we built a not-for-profit philanthropic funding model, which is Revolving. So what we do want to do, guys, can you please be quiet? What we do want to do is with WeShare, as I said, a not-for-profit organization, we want to support and accelerate sustainable development goals. And we do that by a paying forward principle. Next slide, please. Before I forget, if you have any questions, you can put them in the chat. So any questions from EVPA members, please put them in the chat, and we'll discuss them afterwards. We focus on impact. We focus on entrepreneurship. We focus on connection and collaboration. So basically, we are a community with a vision and a mission. I'm not going to read everything, but we do a sharing forward principle, and we work with social entrepreneurs. These are our partners, but I would like to especially go to the next slide, because that is far more important, and that's the financing, patient-focused, early-stage medicine discovery and the development of these medicines. It's extremely important for entrepreneurs in this sector to overcome what we call the valley of death. This is the first stage of developing or discovering medicines. It's well known that 80% of seed starters, early starters, will fail in the first 3 to 5 years. What we try to do with our funding model is to overcome this valley of death so that we have more successful social entrepreneurs, and in this respect, entrepreneurs who are discovering new medicines. Mm-hmm. Next, please. I think we're now going over to Ilke. To Jessica here. Jessica, can you further tell about our partnership and how MDC worked together with us in the development of discovery and development of medicines?
Yes, thank you, Edward. So as we mentioned, we currently have 3 syndicate programs in 3 areas of high patient need. And what we want to do through our partnership is WeShare is really identify innovators across these different areas who are progressing spin-outs or startups, and provide them with a grant, which will then ultimately be paid forward to the next generation of startups. So if you can go to the next slide, this shows an outline of our partnership. So later this week, we will be opening a call for applications where we will invite companies across Europe to apply for funding from the MDC and WeShare partnership. So we've already done some engagement through a press release to announce our partnership with potential companies, and we know that there are a lot of innovators out there who are interested in this grant. We'll then hold a scientific due diligence process. So working with our excellent syndicate networks, which include clinicians, academics, and leading industry representatives like Deb, we will undergo a rigorous due diligence process, really identifying which of the applications are scientifically robust and have the best potential to demonstrate impact in the clinic. We'll also undertake a review with people who have each of these diseases, so people with mental health conditions, hearing disorders, and cystic fibrosis, to identify those applications that people who have these diseases think will make the biggest impact on their lives. And that patient focus is really important to us. We'll then select the top 5 applications, and WeShare will conduct their own business model due diligence. So this will be looking at the company's business and funding models to identify those which have the most promise and the best chance of succeeding. And we hope that by the end of June, August time, we will have identified at least 2 projects to provide a grant to. So these grants will be around 300,000 euros. So they're basically grants to support companies with that catalytic funding they need to get the data they need to then build a bigger funding proposal, whether that's to a larger grant funder or to a VC or another approach. And throughout the process of identifying those companies, we'll also be actively fundraising for philanthropic donations to support these companies. And I think Edward can probably tell you a bit more about that.
Thank you, Jessica. So what do we do with the revolving funding model? It's actually a very simple model, but very effective. Basically, it's a paying forward system. What we do is we attract funders with philanthropic capital to fund one of the startups selected by MDC and ourselves, and we fund that startup. Once that startup is successful, we expect them to donate back to WeShare again, so that we can fund the next entrepreneur in medicine discovery. So basically, from being a startup in a medicine discovery area, you become a funder at a later stage once you are successful. It sounds simple, but it isn't. In order to make this model successful, we need a volume of funders. Startups will still fail. Some will be successful, and the successful ones will fund the next generation of new startups. This model, if you calculate it, it's different per sector, but if you calculate it for the medicine discovery sector, we have calculated that roughly 40 to 50% more startups can be funded over a period of 5 to 7 years. So instead of funding or donating to one company, in the end, you donate to more companies, and as such, we can develop more early medicines. Do join us in sharing it forward. We're basically a movement to do this. We want to be the catalyst for innovative funding, and we want to help more innovators and patients to succeed in the discovery of medicines. Next, please.
Yeah.
What are we looking for? We are looking for philanthropic funders, or even commercial funders who give a small part of their future income to WeShare. and we will invest it together with MDC in early medicine discovery and revolve these funding. So instead of funding one company, in the end, you fund more companies. We revolve it. So also grants given to startups can revolve numerous times and will fund more and more startups. So please do and join us in WeShare. We really want to make this happen together with MDC in the early medicine discovery. We don't only do this for medicine discovery, we also do this for other social entrepreneurship and innovative driven impact startups. And we do hope that you will join us, especially with the medicine development and discovery, to start doing this in a more revolving way. I think we have some questions and answers now. Let me look at the question box if I can read it. Are there any questions? Do send it in the chat box if you want. I don't see any questions. Jessica, maybe I can ask you a question. So far, how many startups have you already looked at, and where are we today?
Yeah, so I guess in each of the different therapeutic areas, we've done a lot of landscape mapping as part of the ongoing programs. So we know where the innovation is in the startup arena and in large pharma. So we know that we've got a good number of startups that are really keen to apply for these grants. And these are actually startups that are not just doing their traditional medicines discovery in terms of small molecules. They're testing innovative approaches and really driving new ways of working. So I think it's a really exciting cohort of startups that will apply for these grants, which is a really exciting place for us to be. I guess the other thing that I just wanted to mention is how important venture philanthropy can be for medicines discovery. So you might not know, but actually the Moderna vaccine, Moderna, the company, probably wouldn't be where it is today without a venture philanthropy donation from Dolly Parton, who supported the company really early during its development. And the company has obviously gone on to leverage much more funding from the government and elsewhere, and it's now produced one of the world's leading vaccines for COVID. So it shows how critical that early donation can be to providing catalytic funding for a company. And I hope that through our partnership with WeShare, we can be that catalytic funder for the game changers or change makers of tomorrow in medicines discovery.
Indeed, I mean, early stage funding is extremely important, Jessica. And if I listen carefully, it's also a call to action to people from EVPA to join us in this early medicine discovery process. And as you say, without Dolly Parton, Moderna would probably not have been invented in the first place. Let me see, we have some questions here. How do you support startups beyond finance? I'm not sure whether I fully understand the question, but what we basically do at WeShare is, as I said, kickstart the financing with philanthropic capital, so patient capital to overcome the valley of death. Once you are out of this valley of death, then your company should be able to attract finance themselves and be able to attract more commercial capital to further develop the financing of the development of the medicine you are making.
Yeah, maybe I can add to that as well. So I guess one thing that we're really hoping to do through this partnership is not just support startups with that funding, but also to provide that non-financial support as well. So by linking in with our syndicates and experts like Deb O'Neill, who's obviously been through the drug development pathway, we can provide access to expertise and networks for these companies. And we're hoping that when we do select the 2 winning startups, we'll also develop a bespoke panel for each of those, so that as they go through their grant funding, they'll have access to business experts, disease specific experts, and they'll be able to really kind of leverage all that expertise, knowledge, and create more successful programs. So I guess this is not just a funding initiative, it's a funding and access to expertise and kind of an incubator initiative as well.
That was indeed also one of the questions. Is there an added value for a startup to be part of your network? I think you've already answered that question in more detail, Jessica. Indeed, the community around MDC and also WeShare can support the startups to further develop in every stage of the company.
Yeah, and maybe I can just ask Deb to come in as well and just kind of give a bit more information about how the syndicate can provide that added scientific and clinical expertise.
Definitely, and I think it's interesting, and we've already had some contact, and that's the royal we. It's really you know, been contacted by some really exciting groups, companies, some, you know, academic groups already since the syndicate was born, let's say, and I guess the awareness now of what the syndicate can offer, and that unique resource of providing links into leading academics, and this is now, you know, beyond the UK, it is Europe and the world. You've got great links even with the CF Foundation in the US, leading clinicians who, you know, give up lots of time to be involved with the syndicate. Companies, I think every company pretty much involved in this space who's established, even if they are still at a relatively early stage, is involved. So that's unique. So I think already the asks that you've had and the introductions that you've been able to make to assist some of those companies have been really useful. So I'm really looking forward to the applications that we do get for funding. And it's nice to know that I think that the groups and the innovators who already know about us at least will be aware that that funding comes with all of that. And, you know, even for Novabiotics, you know, we're at a much later stage than the companies who will be applying for this funding. But this network, this unique network has even benefited us. You know, there are connections that I've made that I wouldn't have without the syndicate. So it is really, really valuable and such a great offering. So very much looking forward to the process getting going soon.
Yeah. And the other thing actually that the syndicate enables, which isn't easy for small companies, is access to insights from people with CF. So we involve people with cystic fibrosis in everything that we do, from strategy setting to project development. And we've held virtual symposiums where we brought companies together with people with CF to actually discuss in detail the needs and priorities of people with CF. And we know that that has actually transformed the way that some companies are thinking about positioning their programs. And this is only going to mean that the programs are going to be more successful when they get to the clinic and more successful when they get to people with CF. So that patient engagement and involvement, I think, is a really important aspect of the program too.
I have another question. What is the amount of funding you are targeting for the pipeline of startups that you expect? Maybe I can start and then you can add to it, Jessica. For the first stage of helping the companies, we target 2 companies. So we want to select 2 companies from the startups who will apply to the program. And each startup will receive around 300K of euros to fund the first stage. So 600K in total. But as Jessica and also Deborah already indicated, funding is one part of the things we do. The other part, obviously, is really helping the companies forward to further discover and develop the medicine. Jessica, do you have anything to add?
No, I think you've covered it all. So 300K initially. Yeah.
I think we now go to Boehringer Ingelheim, to Dr. Ilke Wieke. It's making more health. So Ilka, the floor is yours. Very good to have you with us today.
Yeah, thank you. Good morning, and very interesting and inspiring discussions we just had. It's a pleasure to listen to that. I think it's exactly what we need. And let me introduce myself. My name is Ilka Wieke, and I'm the global head of Making More Health at Boehringer Ingelheim. So in my presentation, I will take you to a completely different world. Before I explain a little bit more or expand a little bit more on that, let me first explain what Making More Health at Boehringer Ingelheim is and what does it mean. Making More Health is an initiative in a joint partnership together with Ashoka, with a history of 10 years now. It is focusing on connecting the traditional business world to the social world. And by that, creating shared value, how we call it. So what's the connection to what we have just discussed in that session here? Within that initiative, we are supporting social entrepreneurs. And since 2018, we are also supporting social enterprises, early stage social enterprises in a very vulnerable, emerging, developing part of our world, where access to healthcare is a tremendous need. We are focusing on sub-Saharan Africa and looking at social startups in sub-Saharan Africa. They are fighting with 2 major challenges, which we call broken systems. One is basically the underdeveloped healthcare system. So an unaffordable and underdeveloped healthcare system in which half of the population has no healthcare insurance, and a finance ecosystem which is also underdeveloped, making access to funding, in particular for high-risk, early-stage social startups, tremendously difficult and challenging. So within our Making More Health initiative, there are a couple of initiatives supporting social entrepreneurs. And today I would like to focus on this initiative, which is called Business Accelerator. Our Business Accelerator has been set up in 2018. And you can look at it as an incubator or basically a venture builder. So we are selecting high impactful social startups and support them by donations and expertise and competence of our Boehringer Ingelheim employees. So this is the second very important part we see in the equation to help early stage startups, as well in the development countries, but even more in the geographies we are active, to grow, scale up, and make their business sustainable. So many of the funding mechanisms which have been discussed before by you, Jessica, Edward, or Deborah, do really also apply in these geographies. We support them with initial startup fundings of 50,000 euro. And if they can show progress as agreed upon, they may be eligible for another 100,000 euro of funding, which makes in total a 150,000 euro funding, which is substantial, yeah, in these geographies. And as an example, until 2018, we have supported a total of 14 social startups across the healthcare continuum, but also focusing on animal health, which is very, very important in these geographies and for the communities. Not all have received scale-up funding, as we call it, but all of the 14 startups have received at least a 50,000 euro donation and the co-creation help of Boehringer Ingelheim and the expertise and the background of our pharmaceutical company. So although a lot was achieved within these structures, we have learned that exactly after our support, these companies enter what has been described as the valley of death. These, in particular, the very, very high impactful social startups need early stage seed funding at a very, very early stage and a high risk status, which comprises a big challenge for these companies. Plus, referring to the problem statement in the beginning and the underdeveloped healthcare system, healthcare as a venture capital scope is a challenge and is very much underrepresented, in particular in these geographies, leading to the fact that most of the companies in the early stages rely on grants and donations, and these are limited. So there is really a big need for innovative financing, we see. A big need for financing, accepting risk of failure, financing which comes in support and co-creation with competences and capacities, and financing which combines, again, both worlds, profit and non-for-profit, to make these social startups sustainable. And just to give you a little bit of a background of the portfolio we are looking at, for example, Access Afia, a very innovative startup, is pioneering a model in which they set up and establish microclinics in the slums, where healthcare is really tremendously sparse and of high need. We have CowTribe, one of our animal health companies, which is addressing a big issue of farmers losing livestock, and they want to target it by improving supply chain losses and education. We also have companies like eTrash for Cash, with a very innovative business model, motivating people at the bottom of the pyramid to collect their trash. And while collecting that trash, they leverage it and refurbish it and pay back on the returns to the people in form of healthcare vouchers or financial. And there are many more of these very interesting, innovative early stage companies, and they all need to cross this valley of death. So based on this and our experience, we will be launching a new initiative. which is unfortunately right now under embargo because it will be launched in 2 days during our Making More Health convention at Boehringer Ingelheim. So, but what I can say is that this initiative will focus on complementing our current initiatives, which are based on grants and donations, by allowing us to do investments. So we will be able, as of the beginning of next year or the course of the beginning of next year, to continue to support such early stage startups beyond donations by investing in them. And what we also truly believe is that investments is a very sustainable form of capital if it is contributed and dedicated under the impact first parameter. And by doing investments, we also hope to engage with additional partners and really create a coalition of partners, of like-minded partners, to aggregate capital and to be catalytic, as you also nicely referred to in the previous session. And by that, bringing a little bit contribution to a system change in this geographies. So this is the end of the speech, and what I'm displaying here is our Making More Health event. Please sign in and join us. I have posted the link in the chat. And on the first day, there will be a highlight session number 2. And at this highlight session, we will announce our investment vehicle targeting first on social startups in Sub-Saharan Africa. Thank you very much for your attention.
Can you turn on the mic? Oh, it's on. Okay. Thank you very much, Ilka. Very interesting to see that you build or are building an incubator to help social entrepreneurship in these emerging markets. As I already stated, 80% of startups fail, possibly in emerging markets, and focusing on social entrepreneurship. Life is even more difficult. So any support in that direction obviously should receive funding from EVPA members. So this again is a call to action to support social entrepreneurship and also medicine discovery, which we discussed with Jessica and Deborah before. You also said, it's impact first. I think it's also extremely important. Obviously, everything should be impact driven, but what is impact? I think proof of impact and the measurement of it is extremely important also to avoid greenwashing. So also in that respect, WeShare is developing tools to help measure the impact of social entrepreneurship. If you have any questions, then please put them in the chat box. Let me just see whether there are. There is a question. All speakers are talking about the valley of death. How can we better be prepared for this? What is underlying this valley of death? Is it risk aversion? Are there other important underlying reasons? If I look in general to the valley of death, maybe Jessica can maybe pinpoint it more in terms of medicine discovery. But in general, the top 3 issues for entrepreneurs, especially also social entrepreneurs, is the product market fit and getting traction of their product or service. The second issue is funding. There is always a lag between what investors want to achieve and what entrepreneurs are offering, and thus it will always cost more something, and it will always take longer time. And the third main issue in general is the team. And it's not only complementary teams. I mean, that obviously is very important. Diversity is very important, but what research has shown is that especially the culture of a company is extremely important. So the top three items are product market fit and traction. So selling your product. 2 is funding, and 3 is team. Jessica, maybe with medicine discovery, you can pinpoint in maybe a bit more detail what the issues are there.
Yeah, so in medicine discovery, there is actually a very specific funding gap in translational research. So there's quite a lot of funding for basic research where academics will investigate the underlying biology of disease. And there's quite a lot of funding for clinical research, so testing new medicines in human trials. But actually, the funding required to translate findings from the lab to the clinic is high in demand, and there's not much of it. So it makes it extremely competitive for companies to go after these very scarce grants. And it just means that there's not that much funding out there. And for companies who are starting their journey in medicines discovery, that's exactly the kind of funding that they're after. And unfortunately, they need that funding to then gather the data to provide a compelling case to venture capital, for example, for investment. So there is just a big funding gap in medicines discovery. And I don't know, Deb, if you've got anything specific to add to that.
Yeah, absolutely. It is that translational piece. It's converting, if you like, that exciting basic research with the evidence to suggest that this has the potential to be a therapy, and that's what's going to excite potential commercial partners, investors for the future. And it's that data that makes such a difference. So funding that data can really accelerate that innovation, and the groups and companies developing it on their journey to this thing and the innovation becoming a product eventually, and benefiting, at least in medicines discovery, the patients who need it.
Ilka, it's also good from your perspective and your experience in emerging markets, what the main issues are there, because they will be slightly different than it probably is in the Western world, or if you do medicine discovery.
Yeah. And me, maybe a bit of background coming from the traditional venture capital space. I have set up the Boehringer Ingelheim Venture Fund, our corporate venture capital investment arm, who is also focused on early stage investments. And it's very interesting now to see and and compare the two worlds. Yeah, and I think there are some similarities. Because at least from my experience of the last 10 years in the traditional venture space, it is also a question of assuming higher risk. So what I saw in the traditional world is the strategic investors or government supported investors assuming higher risks and being catalytic. In the developed countries, it's even more severe, and in particular in healthcare, it's much more severe. Yeah, it's even a much more higher risk, and as long as these early stage startups cannot demonstrate returns, it's just very difficult to get commercial investors on board. And the interesting part is we do have some portfolio companies already demonstrating returns and even profitabilities. And these companies have international investors on board and are supported by international venture capitalists, and sometimes are now on the way to raising their double-digit million Series C. So this is why in the emerging markets it's so grant and donation based in these earlier stages, which is on the other hand a limitation, yeah, and size and funding size.
Okay, thank you very much, Ilka. Again, if people have any questions, please put them in the chat box. Maybe Ilka, I can ask you one more question about new funding mechanisms. What we do as WeShare is Revolving.
Yeah.
Do you see other new funding mechanisms to support social entrepreneurship? I mean, what we do at WeShare obviously is one way of doing it, but we would love to combine it with other funding mechanisms if they are there in the market.
No, it's a very interesting model. I think you are introducing, and exactly a model which is needed. What you see a lot in the emerging markets is blended financing strategies, yeah, where donations are combined with investment capital. Interesting mechanisms for those investors who are investing for impact first and not with impact, for impact first. For example, to connect return on loans, interest rates on loans to impact achieved. Yeah? So interest rates to be lowered if certain impact targets are achieved. Yeah? What in the traditional world would be value inflection points over the course of your development, for example. So this is also a very interesting funding mechanism. And other than that, I think there are a couple of strategies to convince the philanthropic world to move into maybe such revolving models, or at least a venture philanthropy model. Yeah, to have a more accountable type of capital, a more sustainable type of capital, and to basically recover and redeploy these capital types.
Yeah, I fully agree, Ilka. Last week at the EVPA session at Impact Fest, we also had a discussion with EIF, European Investment Fund of Investment Bank, so one of the largest investors in Europe in funds, and indeed they also are more and more involved in funding other funds, not only by looking at the financial return of investments, but especially at the impact return on investments. And they support fund managers in such a way that they will receive their carry if they create impact. So I think that's a very good development, and also makes the companies more sustainable. Deborah, maybe I can ask you one more time. You know, I mean, you have been developing medicines and a company yourself. What do you see as the biggest issue when you start a company in your area, so that we can see whether we can support future startups in a better way?
I think it is the smart funding, and I was thinking, as everybody's been talking about the irony of, and it's almost a paradox in medicine's discovery, that almost where the investments needed most in sort of public health issues, infectious diseases, antimicrobials, you know, the funding is lacking. You know, there's a bigger need for it and a bigger case for these innovative funding models. But funding, and I say smart funding, that comes with access to the kind of networks that MDC can offer as well. So not just, that's a great idea, here's a check, and I would have loved to have, thought that funding to Novabiotics could have then impacted SMEs coming behind us. I don't want Novabiotics to be on our own. So it really is that initial investment to get that translational research that you can then use for potential commercial partners, even Boehringer, who may want to license some of your technology, or other funders, that you then have much more weight behind your data and it's more advanced. So it really is, the key stumbling block is getting that funding in the area that Novabiotics is in. And it is ironic that the biggest need for venture philanthropy is medicines that really do impact across public health, rare diseases, and this paradox of unmet need versus what seem to be commercially attractive. So yeah, definitely a requirement for the models that we're talking about today. It certainly would have helped Novabiotics, and I can really see this making a difference and buy-in from the new SMEs into these models, and this being sustainable for the future for sure.
Okay, thank you. I think we are slowly coming to the end of this session, but before we do so, I always like to end with basically a call for action. So maybe I can ask each of you, starting with Ilka, where can EVPA members help Boehringer Ingelheim in their efforts to help social entrepreneurship in markets?
Yeah, thank you. So first of all, we really have to thank EVPA, because we are in very close contact with EVPA, and have been also for setting up our investment initiative we will be launching. It's a great network, and I think this is a great value for us, because we have access and can speak to like-minded partners, how we call them, and by that we already start to create a coalition of actors and alliances. And I think this is so important, in particular in the geographies where we are active, to come together and bring different competences to the table. As we said, it's not all about money, but it's also about competences. And there, I really would like to thank EVPA for accepting us and bringing us into this network. And for us, we are also in very close contact to AVPA, the African Venture Philanthropic Association, also for networking. And the call for action I would have is maybe we need more alliances of like-minded partners engaging in these innovative, non-traditional models to overcome that, what we now have used a lot, valley of death, and achieve the support for these innovative, high risk but innovative startups or social startups to become sustainable, and then have access to commercial funders.
Okay, thank you very much. Can I ask the same question basically to Jessica and Deborah?
Yeah, so I guess another thank you to the EVPA for inviting us today, and also to WeShare, our amazing partner in this. I guess exactly as Ilka said, I think generating those alliances of like-minded people who want to fund together and want to develop these innovative models together is going to be really important. So please do get in touch with us if you're keen to work with us and progress this model.
And I can only add a third thank you to everyone, and to say, never underestimate the difference that you can actually make to medicines discovery, and the transformation of solutions to unmet diseases. the impact could be absolutely fantastic in the short term, and obviously what you're doing for innovation in the future with this model and to sustain that adds to that, so manyfold. So yeah, fantastic.
So thank you, Deborah. The only thing I can add is, yes, alliances, yes, funding, but let's also make it revolving. And as Deborah said, even the smallest contribution can help a lot in medicine discovery. Ilka, Deborah, Jessica, thank you very much for joining us today and giving presentations in your respective field. I wish the EVPA members a great day ahead, and thank you very much for joining us today. Thank you.
Thank you, Edward. Thanks a lot.
Thank you, everyone.
Thank you. Have a great day.
You
Thank
too.
you.
Bye.